Hello everyone and welcome to At Barrons. I'm Andy Serwer and welcome to our guest, Mark Hoplamazian, CEO of Hyatt Hotels. Mark, great to see you.
It's wonderful to see you too, Andy.
So you had earnings recently, maybe we'll talk about that a little bit, but first give us a snapshot of Hyatt today.
Hyatt's evolved tremendously. So we're about to celebrate our 15th anniversary as a public company.
Congratulations.
Thank you. And I think about the evolution of Hyatt over that period of time. So back at that time, I think we had about 400 hotels in 45 countries, and today we have 1,350 hotels in 79 countries. So things have changed a bit. We've grown a lot. The other major evolution of the company has been we've gone from a very asset-intensive, asset-heavy structure where we owned a large number of our hotels and derived over 2/3 of our earnings from owned hotels, to now being in a place where we earn 85% of our earnings from fee-based revenue and fee-based earnings, which is a huge transition. So much higher cash flow, free cash flow, much lower capital expenditure requirements. But we didn't forget about the fact that we actually wanted to continue to grow the company in very deliberate ways. So we took a lot of those proceeds and bought new brands and management platforms, specifically in luxury, lifestyle, and resorts. And so in those three areas, we've doubled, tripled, and quintupled the number of hotels that we've got in those areas. So it's been tremendous evolution over that period of time.
A lot of points to jump off of, but first, just two quick things. You've been CEO since
2006.
2006, the lightning round.
Coming up on my 18th
Another
anniversary in December.
And the Pritzker family from Chicago owns about what percent of the company?
It's about 55%, maybe slightly higher than that.
Right, okay. And so what did your recent earnings reports say about the state of affairs?
Yeah, I think basically the market that's had the sort of toughest sledding this year has been China. And the reason for that is a lot of, well, at least for us, we tend to serve the higher end customers. And so they actually took the opportunity to do outbound travel to adjacent Asian countries. So our business in Japan, for example, is up 30% year over year. Our business in Korea is up 20% year over year. So there were a lot of outbound travelers, and that was the higher echelon of the travelers in China. And as a consequence, the business that was left was somewhat lower rated and weaker. So China's had a lot of headwinds because of that dynamic over the course of the year. Concurrently, plane schedules into China, inbound traffic, are still well below where they were pre-pandemic. So flights from the US into China are still at around 30% of where they were pre-pandemic. That's a extraordinary statistic, but is one of the key reasons why our business is almost 100% domestic travelers in China today, whereas before it was 25%, maybe even 30% in some cases, depending on which city you're in, inbound travelers from outside. The US is holding up very well. Business travel is on fire. So I would say business transient, individual business travel has been very, very strong, the strongest segment, up 16% in the last quarter, which is extraordinary, well beyond pre-pandemic levels. And now group business has been improving steadily over the last 2 years, still going very strong. Companies are very committed to getting people together, either internally or with their customers. And then leisure has held up. So leisure is held up at a level of revenue that's 20% above where it was pre-pandemic. And while it's not growing from that level, it's holding at that level, which is extraordinary, I think. So I would say across the board, that's how the different segments map out. Europe was by far the strongest region this past quarter. And generally speaking, very high momentum. Yes, the Olympics helped. Europe 2024 soccer matches in Germany helped. But let's not forget Taylor Swift. Thank goodness for Taylor Swift. I'll tell you, it had a huge impact on our hotels in those markets.
So those are some shorter term trends. Maybe some of those translate to longer term trends, but I'm wondering, what are some of those that you guys are looking to take advantage of?
So first of all, travel has translated from something that was viewed as sort of purely discretionary to something that is now viewed more and more as essential. And I mean that in two respects. One is personal, so it's a human need, and secondly, from a commercial perspective. So we really have seen, and I think COVID really illustrated this in a clear way, that people have prioritized travel, and they are going to continue to prioritize travel. And that's especially true for the higher end traveler. So that's the first fact. Mm-hmm. Second is well-being is becoming more and more important as a dimension of travel and a dimension of life. And we've leaned into that tremendously. We own a brand called Miraval, we have, which is a destination spa getaway. And we've taken a lot of the practices out of Miraval and brought them into our group business. So one other mega trend is that. Third, I think the thing that's going to drive business most acutely over the next 2 years is an elevated level of cross-border travel. And I think if China stays on the path that that the government has recently set for them, you will see a return of inbound travel from many other countries that have not to date come back. But the velocity of travel around Asia will continue to increase. Maybe the fourth thing is we always talk about US, Europe, and Asia. The Middle East is also now rising in relative importance. The Kingdom of Saudi Arabia is investing enormous amounts to really pivot the entire economy over the next 30 years away from carbon, away from oil and gas, towards being a destination. And so they really are focusing on tourism. Hotel construction is on fire. I think a huge proportion of the construction cranes in the world are now, you can find them in Saudi Arabia.
It's interesting, you talk about a lot of these trends, but there's also some headwinds in some of the Middle East. China, obviously, you mentioned sort of coming back and sort of reconfiguring itself in terms of how it positions where it is vis-a-vis the global stage.
Yeah.
So what about nationalism, global conflicts? How do they influence your business?
They can, for sure. They're hard to predict, of course. And I think the actual conflict in Ukraine, for example, has been, I would say it's manifested itself in more personal strain for members of the Hyatt family, because our hotel in Kyiv never shut down, still operates today. A lot of the team members did make their way out of the country because they were concerned for their own safety and their family safety. We have a team on, at the hotel and a resident group of guests that can all fit into a third-level basement, which is considered to be essentially a bomb shelter. So there are individual things like that, but in terms of sort of that having knock-on effects. Yes, our hotels use energy, so to the extent that there are energy cost spikes in Europe as a result of the sources of the energy that they're tapping, that could be an issue. Hasn't been so far. In terms of China, it's a very complicated analysis, and I'm not qualified to actually evaluate it. What I will say is they understand, and if you look at what they're trying to do in the most recent reform and the stimulus package they put together, they recognize that they need to have a vibrant economy. They have an aging population. You can't balance that unless you have got people traveling into the country. Right. It's literally impossible to do that. So I don't think travel will be one of the things that gets cut off. In fact, I think they'll probably promote it. And they may even have to think hard about an expanded perspective on immigration to actually fuel the job requirements where, as an aging population, you may not find local Chinese to do. Frankly, there are quite a few countries, United States included, that could do with a better immigration policy.
I think a lot of people would agree with that.
Yeah.
no matter what side of the aisle you're on.
Yeah, especially in our business where we really have a need for people who are willing to take entry-level jobs.
You mentioned transitioning the business to being more fee-oriented rather than directly managing, and I'm wondering if there's a trade-off there at all, Mark. There was a story in the paper recently about an unlimited vacation club and some customers being unhappy there. You manage that. You used to own it, now you manage it. What about that story, and what about any trade-offs that might exist in the business?
That is not really. I think the separation of the real estate and being more management and franchise focused is a trend that we've been on. And frankly, if you look at our larger competitors, that's where they are and have been for a much longer time than we have. So I don't think that's actually an issue with respect to our ability to maintain quality in our operations. The UVC story in particular was focused on a small sampling of 150,000 members in a program that's got tremendous inherent value. And so, it does relate to a network of all-inclusive resorts. We're one of the larger all-inclusive players. And I think that there were reports about sales practices and so forth that we're always aware of and keeping track of. And first and foremost, we operate in a high integrity manner and with high quality, and that's what our commitment is. It's one of these things where I think Warren Buffett said your reputation is built over decades and can be lost in a matter of minutes. We're well aware of that, and we've been in business for 67 years now. So we have a very strong commitment. We have. It was founded by a family that is still directly involved in the business. Our chairman is Tom Pritzker. So we don't have, we have an uncompromising approach to making sure that we're doing things that we do right.
Shifting gears a little bit, there are a number of big players that you compete with. And I'm wondering, say, just in the United States, you've got Marriott, you've got Hilton. How are you different from Marriott and Hilton?
Our mix of business, first of all, is quite different. So we manage about 70% of the hotel rooms that have the Hyatt flag on them, and Hilton, for example, is over 80% franchised. So very different realities, and part of that has to do with the fact that they have a very large layer of upper mid-scale and mid-scale hotels, Hampton Inns, and so forth. When I say a large number, I mean like half of the entire portfolio of hotels is in that category. We don't play in that category at this point. We've just launched our first brand in that category, and we don't even have our first hotel open yet. So that's one major structural difference that I think we have. We are much more concentrated in the high-end traveler, partly by virtue of what segment we have elected to serve. And I think finally, we have a very strong culture that is really based on our purpose, which is about caring for people so they can be their best. And we define, a lot of people in our industry talk about service, but we talk about care. And the difference between being able to care for someone and serving them is empathy. So if you don't practice empathy and get to know really what that person needs, the action that you take to try to care for them can be really off tune. And so that's really what we've committed ourselves to. And I think it shows up on property, in the culture of the whole company.
A couple more questions about the business. Why is there so much deal making in this industry, by you and again, those competitors?
Yeah, I think there are wonderful smaller brand enterprises that are started by entrepreneurs who have vision and are relatively unconstrained. Maybe they're constrained by capital, but they are, and let's face it, necessity is the mother of invention. So the more innovation that's required, the more innovation that happens in order to actually build a brand. So one of our recent acquisitions, which is the Standard International, it's the Standard brand, Standard X, and Bunkhouse brands. They've created extraordinary brand equity and brand strength from a relatively small group of people with 22 open hotels, 23. And so with a bunch of other hotels in the pipeline. And I think we have a lot to learn from them, actually. And I look at analogs in other industries. I think, large pharma companies buy biotech companies. Why? Because they figured out faster and better ways to get at drug development. I mean, if you look at Pfizer, one of the most storied, largest pharmaceutical companies in the world, they partnered with BioNTech for the COVID vaccine. They didn't develop it themselves. So, and Moderna, which was the other one, was also a small company. So it turns out that sometimes these big avenues of innovation come from inspiration in small enterprises.
This next question is of a piece with that last question, which is, when do you decide to change a brand's name? And you've got a lot of different brands and collections.
Yes.
How many is too much? When is it worthwhile to attach your name to a boutique hotel's brand, and when is it not? I'm always curious. Sometimes that's a plus to see that big company name. Sometimes it's a minus.
I would say that when it comes to lifestyle, especially high-end lifestyle hotels, to the extent that the brand itself already has brand equity, don't mess with it. Like, that's not a good idea. If you're launching a new brand and it's not intended to have, a very, very specialized operating model with really exacting standards and so forth, like maybe in the luxury section or otherwise, you can, and we did once. The Andaz brand doesn't have Hyatt in the name. We did launch a brand without the Hyatt name in it. Anything that's lower in the chain scale, meaning more limited service, more select service, I think association with the brand brings the imprimatur of quality and reliability, and that's really how you can distinguish it.
I want to ask you about the stock a little bit. Over the past 10 years, your stock has lagged the market and its peers. Over the past 3 years, it's exceeded them. Why the difference? What's going on there?
Yeah. So in 2017, we announced that we were going to start selling down assets. We did that ahead of what we committed to and what the market expected with respect to sales prices we got for our assets, and also the rapidity with which we were able to sell down assets. The investments that we made to grow the management and franchise business in key areas that were growing themselves, and we bought really high quality brand platforms, started to perform extremely well. So that whole, the teeter-totter shift with tremendous earnings coming from now asset-light platforms took hold and were demonstrated. They were laid bare for everyone to see, I guess, in the last several years, and I think that's why we've been able to enjoy significant increases in our stock price.
And why should investors buy the stock going forward, Mark?
We, among the major brand companies, right? We are the smallest of the major three, let's say Hilton, Marriott, and Hyatt. But if you include companies like IHG or Accor, we're still the smallest by a wide margin. So we have very, very high brand equity and awareness, but we're not particularly heavily penetrated anywhere. So we looked at across the globe, and we looked at every single market in which there's a Hyatt property. On average, we have 4 hotels in each one of those markets, on average. And on average, our 2 largest competitors have 14 per market. So the relative concentration and depth and saturation is completely different. Second, we only participate in about half of the market tracks in the whole world where you have hotels. So we just have enormous, enormous space to grow with high-performing brands and with a lot of brand equity and brand awareness. So that's really the key to the future.
A couple questions about you. What is it about your background, growing up, education, that helps inform you to be the CEO of this company?
That's complicated. I came in not knowing the hotel business very well. And I think that level of ignorance was sort of a superpower, because I got to ask a whole bunch of so-called stupid questions, and it opens your eyes. Like, you come in and you're seeing things afresh. And I'm a big believer that a fresh set of eyes is super valuable. And I think I've been on that never-ending journey of learning since I joined. And people initially didn't believe me. They were like, yeah, you've been around the company for a long time, because I'd worked for the Pritzker family for 17 years before I joined Hyatt. And they said, yeah, right, you don't know the company. But when I started asking questions, they were like, oh my gosh, this guy really doesn't know what he's doing. We have to help him. I think it's that learner's mindset. I have previously talked about how much I admire Satya Nadella for what he did in making, to use his words, he turned Microsoft from the know-it-all company to the learn-it-all company. That growth mindset idea, I think, was a massive unlock. And I think that more than anything else is what helps me do what I do.
And final question, what is it like traveling as the CEO of a hotel company? I mean, is it great? You get any room you want, you don't even have to check in? Or are you always going, oh my goodness, that cup is in the wrong place?
Yes, is the answer to that question. I was shaking my head because it's the booby prize of my position, because every time I show up at a hotel, everyone wants to give me the nicest room and, you know, amenitize it and so forth. And when really I am always insisting on staying in a regular room. Why? I want to know what our average guest is experiencing in that hotel. And secondly, I get notes from people with feedback, and I want to be able to relate to what they're saying. Secondly, I've been in the business for a long time, and I do pay very close attention to many things. In fact, I don't have my phone on me, but just this morning, I was staying in one of our hotels, and I took 2 pictures to send to the GM to say, okay, so you've got an outlet access issue right here. Well, the other one had to do with an extraordinary breakfast that I ordered to my room. And then I saw the bill and I said, I don't think we're really capturing the value for the customer. I think this is an extraordinary value. Like I would expect to spend much more than what you just charged me for this. So you might want to go back and revisit providing that quality and level, like volume of food for that price. So those are kinds of things that happen every day of my life.
You got to tell me which hotel that is. Mark Hoplamazian, CEO of Hyatt Hotels. Thank you so much for joining us. This is at Barrons. I'm Andy Serwer. We'll catch you next time.